Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so here, this is pre-market prep for Thursday, February 6th. And so, yeah, I'm just going to go over, the VIX, the SPY, as well as Bitcoin, uranium, and then a few stocks that stand out to me. And so here we're looking at the UVIX, which is the 2x long VIX futures ETF, which closed yesterday at a price of $28.38, being down almost 4.5% on the day. As we can see here, that it has been pulling back. Was above 30 yesterday, hitting a high of $30.50, but clearly closed below that orange line there. And we might be heading back down towards $27, which was the low hit on January 24th. And I actually think we could be heading lower than that over the course of the next couple weeks, potentially coming down to $25 or so. So that is what I am looking for. But, I am a little bit hopeful that we might see another little bounce before the end of the week. But I feel like the highs that we saw over here were it for this green box, and we will be getting back into a red phase, perhaps forming a new low, like I said, around $25 a share. But if we do, let's see, look over at the 10-minute time frame, we can see that in the pre-market it is up a little bit, 28.52, so about 0.5%. And let's see, yeah, I guess it closed over here and then it just kind of gapped up a little bit. So, it's effectively been flat in the after hours from yesterday and pre-market of today. And then we can see here the during market hours trading, it was, like I said, above $30 a share, but then has since pulled back and kind of resided lower over here. So yeah, I do think that we are going to be moving back into the red phase very soon. And so, I'm kind of bracing for that. I do think a dip to 27 is on the table. And, like I said, again, even lower than that, potentially even lower than 25, as we do have, this parallel channel here that it has resided in for quite some time. It could be heading down to, let's see, got this Fibonacci retracement here, or what is this here? No, this is actually the extension from this Fibonacci extension over here, and that is at a price of 22.50. So, don't be surprised. It is the volatility index. Don't be surprised if it heads down that low. So, yeah, over the next couple of weeks, 25, if not 22, or I should say 22.50, if not $25. But yeah, now let's flip over to the VIX, which does not have pre-market trading, but I've just got a little bit more on the chart here with this uptrending level that was resistance longer term than the little uptrending level that we have over here. UVIX does tend to fade over time, so we can't establish as many nice levels as we can with the VIX, like over here. And so that, again, is a level that we did move up to but got rejected from and then pulled back. It does look like we'll likely be filling this gap at 14.85, perhaps, like I said, over the course of the next couple weeks, maybe even coming back down to this low at 12.70. And I should have started this at the 10-minute time frame like I had the UVIX over here so we could see this price action from yesterday. And so if we do look at that, I don't have the fancy orange line marked here. I also need to adjust the axis. So yeah, I don't have the $30 orange line here marked like I do on the UVIX. I don't have it marked on the VIX, but yeah, we could just see that it was, let's see, on the 5th, that was over here, started up here basically with this big red candle and then it faded down, continued to fade lower. So not looking so great there, and I should mention that it did close yesterday at a price of $15.77, being down almost 8.5%. So percentage-wise, more so than we saw over here with the UVIX, which is only down by about 4.5%. But now let's switch over to, let's see, the SPY. And so we're looking at that here on the daily. It did close yesterday at a price of $604.22, being up almost 0.5% and going up about 0.1% in the pre-market currently. And so just like I talked about yesterday, I was thinking that we could be moving above this gap, potentially to this downtrending light blue line, which is of course the top of this parallel channel that we see here. And so, do I think that's going to continue higher, or do I think it will be getting rejected here? And so what we can see is that, volume isn't super high, and it's actually been going down. We've seen these 3 green candles progressively going higher, but what we've seen actually with the volume is the exact opposite of that. We saw this nice big green candle here on the 3rd, that had a volume of 66 million. Then on Wednesday, we saw a big decrease in the volume, going up 33.5 million, so about half of what we saw on Tuesday. Wednesday came down by about half, even though price was pushing higher, filling that gap. And then again yesterday on, I've got my days wrong. I'm not used to recording videos in the morning. So this was Monday on the 3rd with the 66 million. Then on the 4th, that was Tuesday, half of that volume, 33 million. And then yesterday on Wednesday, saw a volume of 30.65 million. So not as much of a difference between these 2 days, but still volume getting lower as price is going higher. So that does suggest some weakness, that there might be a rejection around the corner. And with that being said, we have been putting in lower highs here, even though this was a new all-time high at 610.78 hit on the 24th of January. We have been putting in lower highs following that. So I suspect that we might not be getting up to the high that we hit on January 31st, which was at a price of $609.96. So maybe we just get up to this blue line here around 608, get rejected there before pulling back. But that does not mean that this is overall bearish, because it does look like we have seen this up move, consolidation here above this downtrending yellow line. And so that does to me look like it is a bull flag. So, I would look for that. And also, one note that, about the volume decreasing here, we do see the MACD here in this histogram signal, is that we do have a little spike here, and then it's kind of flattened out, but it doesn't necessarily look like it's going to invert. It just looks like it's cooled off before we might see another continuation higher. So that makes me feel like this is more likely to continue higher, but maybe then we would get that rejection around 608 before pulling back. So, I suppose that is what I would be looking for. But then if we do switch over to the 10-minute time frame, we can see that the after hours yesterday did hold the gains that it had for the day yesterday, gapping up now into the pre-market, but then fading back to fill that gap nearly. And so, where are we going to be opening up? Probably right around 604, maybe 605. Did get the high in the pre-market of 606.05. But we might be coming back to 601 or 602 during market hours today, which was this blue line here, which was a gap that has previously been filled. If we do flip back over to the daily time frame, we can see that gap there that was filled. Maybe we pull back to retest that 601 and then make the move up to 605. So we will have to see there. But just looking at the time frame here like this, let's flip over to the SPX, which does not have pre-market trading. But I just wanted to look over at this to see that, let's see, on the 5th, so yesterday, this is the first candle here, so kind of started the day with a gap lower, but then we bounced here at right around $6,007, and let's see, the low was 6 cents there, so right around $6,007, bouncing, getting above this previously filled gap, and then hitting a high yesterday of $6,062.86, closing the day at $6,061.48. So yeah, it will be interesting to see if this can continue higher. As we can see, there was that previously filled gap there. I might actually just switch over to the daily time frame, and we can see, yeah, that gap there. And we are bumping into that downtrending light blue line, that parallel channel, just like we saw with the SPY. Not surprising there. And we can also see this really beautiful test of this downtrend here that, we just barely kissed it on the 3rd. So on that Monday, moved down to that level. Very nice bounce. Maybe we pull back to around $6,040, $40.50, where that previously filled gap was. Retest that before going up to get to this, again, previously filled gap there at $6,101.24. But again, just like the SPY, putting in lower highs and lower lows, so we might be getting rejected again. But maybe we start to see a breakout, and that would coincide with the VIX starting to pull back into, another red phase over the next couple weeks. So I think that, with that being said, if this is going to be breaking lower, I think that we see new all-time highs with the SPX in the next couple weeks, but that could, be leading up to that could be a breakdown again, maybe to formally test this 618 here at $5,908.87, or right around $5,900 and not $5,909. So do look for that. And then if we do now switch over to Bitcoin, it does look like we're potentially getting a retest of $100,000. We have been trading lower than that the past couple days following this pullback when David Sachs and the banking committee spoke on, I believe that was Monday. Or maybe that was Tuesday. I'm not exactly sure. But we did, I think it was Tuesday, did get a pullback. Following that, I think it was a little bit disappointing because we want to be seeing, Bitcoin strategic reserve. We just haven't seen that yet. And one thing that I think is actually going to be really interesting about Bitcoin this weekend is, so last weekend we formed this CME gap, closing, Friday right around $102,000. And then we got this massive move, test this red uptrending level here, or actually to form that uptrending line. And, there was a lot of panic over here, but because of that CME gap, it was kind of like don't worry about it. We will be bouncing. We will be filling that gap. And so that's exactly what we saw. And so with this coming weekend, so it's Thursday now, got a couple more full trading days before the weekend. But what I could see is actually another CME gap, but going in the other direction. I think that we could be seeing potentially a breakout over the weekend, but then that would, of course, be forming a CME gap to the upside. And so any prices that we would hit over the weekend would be, of course, getting an over extended price because we'd be pulling back to fill that CME gap. But of course, that's not happened yet. Just kind of thinking about it, learning as I go. And, this was really cool to see. So I'm kind of looking forward to seeing something like that over the weekend, but like getting a breakout above 100,000 here, this level here, that does seem pretty feasible. But just like with the SPY, I do have a downtrending level here that we did retest, pulling back to the 786 here at around $93,500, actually pulling lower to the low on, I believe, the second, which was at a price of, sub $92,000. I'm saying sub 92,000 because I don't think that an order would have been filled at the low. I think it's good to consider the spread with Bitcoin. And so here it says 91,350, right around there. But I don't think that an order around there, or even 91,500 would have been filled. So I think like 92 would have been the dip buying level there. And so if we do get a breakdown again, I think that 94,000 could be the next level to dip by at, which is, corresponding with the 786 here, also with its downtrending yellow line. So that is what I would be looking for. And of course, not getting greedy with a fill at 93,500. Because I don't think that order would get fills, but maybe we really do start to see a massive rollover and this start to, go lower. So be cautious of that. If I do switch over to the 10-minute time frame, we can see that, let's see, this was on the 3rd. So on Monday, we did, bounce from that red uptrending line up to that CME gap fill, and that we've just been consolidating. Let's see, lower. But so this looks kind of nice. We were putting in, some lower highs, and then we have now broken out from that. So that does look pretty encouraging. But again, this is on the 10-minute time frame. So, don't get too carried away with it. The move for this would potentially be back up to like $102,000. It's not necessarily that exciting of a move, but it is something, and I do think that we've got a lot in store for us over the weekend with Bitcoin. I think that we will be reclaiming 100,000, potentially getting up to 102, if not higher. But I think if that is happening over the weekend, I think we'll be seeing a pullback, so keep that in mind. But I will be streaming tomorrow morning, so there's no worry in thinking about the weekend just yet. But I did want to go over ticker symbol URA. This is the Global X Uranium ETF. It did go up about 0.25% yesterday, closing the day at a price of $28.98, right around 29. And so with that being said, I was talking about this potentially being a falling three methods with the big red candle here, 3 candles going higher, and then a retracement. This was kind of a smaller retracement than what I was expecting, but you combine these 2 candles and we did effectively get that. This, nice bearish engulfing candle here, though, looking pretty good, fully engulfing the candle from the previous day. But we have gotten a bounce following the base of, or the test of, whatever this bottom is. Maybe it's a good idea for me to draw an uptrending level here just based on those lows. So that might be one for us to be paying attention to. And so, it's quite possible that we don't break lower to 24.68 or 24.50, like I have kind of illustrated with this purple doodle here. So I think it's good to, not necessarily expect this to happen. But for me personally, I don't have a position in URA. I don't necessarily plan to establish a position in URA, but I just kind of wanted to keep my eyes on this because, I think it's pretty intriguing. I think that there's a lot of potential for uranium, especially for the U.S. building up its nuclear infrastructure. But then, if we do look at the trading from yesterday on the 10-minute time frame, it does look like there was some after hours, but it is closed now. Perhaps I'm just recording this video a little too early, but we were testing this level here at 28.76. Did get a low of 28.61 yesterday, bouncing up to a high of 29.27. We'll have to see where that goes. But that high, we did close above it. I should note, but what we are not seeing is we're not seeing new highs get put in. So if we do look over here like that, just so it kind of scrunches the screen so we can see the little ticker mark there at 29.35. We're not able to get above that high, and we haven't really been able to put in a higher close. Actually, no, we did put in a higher close. So the close over here on the 30th was at 28.92. Then we got a close over here at 28.91. So a little bit lower. This close, though, is higher than that, but we're not able to put in closes higher than the highs over here, putting in a spinning top yesterday with the big wick to the upside as well as to the downside. That does suggest some indecision. And then if we do look at the volume, we see a high volume on Wednesday the 3rd, that being at 2.94. Then volume came down to 2.06 million on the 4th, and then yesterday on the 5th, 1.89. So even as we're putting in a higher high here, volume has just been steadily decreasing as price has been going up. So yeah, I mean, I stand by this purple line. I am not going to chase. I am going to wait. And yeah, so I think that's a pretty interesting thing to be looking at. And I'm going to skip going over well, actually, maybe I'll just pull up OKLO real quick. Not going to go over it in much detail. But yeah, this did go up to above $50 a share, which is kind of what I was thinking might happen. But it did hit a high yesterday of 52.45. Definitely, it seems like it has a lot more room to run at the Bronx Viking on X, talking a lot about this. So, I think that, potentially there's still more room to run, but I'm not in this. Don't plan on getting into it unless it were to potentially pull back. But, maybe I'd be looking at a different nuclear stock, or maybe I would be just looking to get into ticker symbol URA. But some other stocks that I did want to go over. One is Hycroft Mining. This is one that I have been covering in the weekly options theses, which I'm actually going to do the last one this Saturday. It's just way too much work putting data into those spreadsheets. But through that, I have learned a lot more about reading the unusual whales options data, so I feel pretty good about that. But anyways, with Hycroft, it did close yesterday at $2.59. As we can see here, it has been making some nice moves to the upside. I did have a $3 strike call that expires in May of this year. And I actually got out of it yesterday at just above break even. I think I made about $16, so nothing too crazy on that. But that was one I had put a lot more money in that I really felt comfortable with. In the options contracts with Hycroft, I can just flip over to them really quick here. They are based in 5-cent increments, and so really just not too interesting. And so the strike that I did have was $3 here, and I sold mine at the 40-cent price. So I got, $40 per contract. And yeah, I had my average at 39 cents, and I did sell at the high yesterday. So I feel pretty good about that. I do think that this could be going higher, but just because the contracts are in that 5-cent increment, I really don't like it. There's also not that much data on this pretty cheap stock. So, I am glad to be done with it. But could this continue to go higher? I do think so, because we got this nice big green candle being up over 6.5% yesterday, closing at the new high for, this uptrend that we've been in. But if we do look at that volume, it did increase yesterday on Wednesday relative to Tuesday's volume, but it's still lower than the volume from the 3rd when we were not able to close at, well, I guess we did close at a new high here relative to the close from the 30th. But we got this massive wick to the upside with lower volume. So, we see the price going higher here, but the volume going lower. So that's effectively, kind of like a bearish divergence. But we do see the RSI getting into the oversold territory, or overbought territory, nearly being at 69.46 as of close yesterday, currently closed in the pre-market. But yeah, once it gets into 70 or so, that would be overbought. And I do think that it could be getting into some resistance, so kind of getting into that the support of that volume decreasing. I don't know if you can see it here. There is a light gray line there. I might actually make it light blue and make it a little bit thicker. That line actually goes back pretty far in time, going back to this reverse split that was on November 15th of 2023. And you can see the retest of that uptrend here in March of 2024. Did break below it, didn't necessarily respect it over here, so maybe it's not that significant. But it was over here, so I'm kind of curious, might it be getting into some resistance around there? Also with the highs over here around $2.74. Also that strike that I had at $3, I might actually delete this uptrend. I don't think that's super helpful. But yeah, right around $3. We did have the high here from October 22nd at $2.94. So that might be some resistance around there. So do look for a rejection around there and maybe a pullback before we get to $3, like I said, around 274 or maybe around 265. Yeah, so don't get too ahead of yourself. I don't necessarily think this is going to $3 in the next few weeks. I think we could get maybe a retest of this thicker white uptrend that was support over here. We didn't really respect it too much over here other than residing below it. And so maybe we retest that around like 235, maybe 240 pullback, so look for that. NIO's another one that I think that we're getting very close to breaking out from this downtrending level, going back to the high from October 28th, was tested again over here with the high on December 9th. Nearly got to it on January the 6th, and then we did kiss it just a few days ago on Tuesday, February 4th. So do look for, potentially a pullback to around $4, maybe $4.13. Respecting actually this uptrending light blue line. And so respecting that light blue line, the low over here was 401. So I don't think we'd see a pullback to $4. Maybe they'll pull back to around 413 like marked there. And then maybe we start to really see a breakout, maybe getting up to, $5 to $7, $8 a share. And the last one that I'm going to go over is Wolf. This is one that's looking pretty intriguing. I've been keeping my eye on this since I believe over here, but it's these things always take longer than you expect. You always get a lot of fade to bore people out of positions before we see a real breakout. And so what I see here is this move to the upside from the low that was hit on January 14th at 466, going up to the high from January 17th, which was at a price of $723. And then from that, we have retraced to the 618 around 564, having hit a low on the 4th. So on Tuesday of this week at a price of $5.46. We have not yet pulled back to the 786, so that's around 521. That would also be corresponding with this gap between these candles here, but the proper gap fill would be to this blue dash line around 482. That was the closing price on January 14th. So I do think that there is some still dip buying opportunities for Wolf. With it trading below $6 a share, I do think that we could see 520, but I think that could be a really, really, really nice dip buying opportunity before this starts to take off, maybe getting up to around $15 a share. Who knows? And I should point out that is based on, let's see, the Fibonacci extension here highlighted by those lines, and that is the 100% move. I think it could be going higher, so I am looking forward to that over the course of the next year, but we will have to see. But anyways, I got to get running to work, and as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching, and have a great day trading. Take care, you guys.